Just when you thought it was safe to go outside and buy commodities as we were catching our breath from the Brexit fallout, the dead cat bounce, doof, seems to be over. Investors rushing into safe haven assets. This is the Moneymakers. I'm Bruce Whitfield. Tonight, joined by Jacques Botha, Chief Economist at Afriforesight, to find out whether or not there are any safe havens in the world anymore. 2 weeks ago, we would have said British property was a safe haven. Since then, British property, certainly we've seen property REITs in the United Kingdom shut down access. We've seen the huge fall in Into, the listed property company, and in Capital and Counties, Capco in the United Kingdom. Now it's all about commodities once again, Jacques Botha. Are there such things as safe havens anymore?
Well, some investors certainly believe that, Bruce. The yen and the dollar, but the big one, as you've alluded to, is gold. It seems that gold investors now have nothing to hold them back. There was everything. There was the fears of a fragile global economy, not knowing what the Fed's going to do. Well, what's holding them back now is they realize that the Fed can, or they think the Fed will not increase interest rates this year. So they see no alternative to be having a safe haven like gold. This is, I think, the bottom line of the story.
Now, you can refer to gold as the safe haven, Jacques. I mean, I want to pick just a little fight with you, not a big fight. I would have thought in times of deep uncertainty and crisis, we see gold go back to $2,000 an ounce, not sort of mess around $1,350 where it's been. It doesn't feel like there is large-scale panic. There's uncertainty, there's unhappiness. The gold price is up 25-30% so far this year, but this isn't panic buying, is it?
Not panic buying, but it's let's put some more gold into my portfolio. Let's put some more precious metal, silver, platinum into my portfolio. I do not see much as an investor. How far can the stock market still grow? How far? As you say, what will happen to property markets? And if the only thing that held gold back previously, I think, was in these fragile markets was the fear that interest rates will go up in America and then our people will run back to the banks. Because of course a bank is a very safe haven if it's a big bank and if you can get some interest there, but the banks don't offer interest. And as you know, in Japan and Europe, actually it's negative interest rates. So gold and other precious metals are becoming really, it's the only real asset that we don't see a depreciation if things stay the same as they are, at least until the end of the year when we anticipate, and I think most market players anticipate the Fed to start hiking interest rates.
Now, South Africa doesn't have a silver investing market, but the US does, and silver's been quite extraordinary. We've seen it go from like $14 or $15 an ounce to 20 and above. It's been quite an amazing jump up in the value of silver, certainly the price, not the value of silver.
Yeah. It is amazing, and I think people have rediscovered silver, and everybody wants, as they want to say, maybe a certain percentage of gold in their portfolio. They want to say, okay, well, of that gold, I want a little bit of silver, and there's not so much silver around, and I think that's why also platinum was very much tainted by all these diesel stories, but it is still more scarce and much more difficult to mine than gold. So we're also very bullish on platinum in this period now, to the run-up until the Fed start hiking interest rates. This is a window of opportunity.
Okay, a window of opportunity. The question is, how big is that window based on the uncertainty brought about by Brexit? And we've seen in the last couple of days that Richard Branson has gone off to go meet Theresa May, the most likely successor to David Cameron as leader of the UK Conservative Party, the woman most likely to become the next Prime Minister of Britain. And Richard Branson and others, I'm sure, are desperately trying to conjure a way out of Brexit. Let's assume Brexit goes ahead. What does that then mean for global interest rates and by implication commodities?
Well, in a way it's sort of going ahead already, and that would definitely that is already slowing. I think the big impact is already happening now. Nobody in the run-up to Brexit, and especially now, nobody's investing in the UK, or almost nobody, and even in Europe the surveys are already showing that. So the European economy is already severely damaged. And even if Richard Branson and Vanessa May convinces the EU to take them back and they have another referendum, there's going to be a lost quarter of growth. That's the worst case scenario. But I do not think Well, our assumption is that it's not going to be that easy, and it's going to take a while. And we therefore, that's why it's a safe. We think a safe period to say before anything turns back to rationality, it will be until the end of the year. In the meanwhile, the Fed would have, because we think the U.S. economy is picking up slowly, although there are some latest numbers have shown a bit of pain in the industrial sector again. And we're going to wait for the labor market figures on Friday. But even if the job numbers look good again, we think the Fed will be very cautious. They would not like to risk a recession. China's their second quarter GDP growth came out very well. But their numbers, their production numbers are also looking very bad because Europe was their biggest client. They were they were the factory of Europe. And Europe growth is definitely down. So it's like a house of cards, and the cards have been falling already, we think. But I agree with you. I think I could only really talk with forecast, to really forecast with certainty it is anyway impossible. But I would say until the end of the year, the cards are sort of stacked against global growth and very much towards uncertainty, and therefore the Fed would not do anything with interest rates, and even the dollar hasn't really, on the day as breakfast was announced, the dollar jumped up. If you look at the dollar index measured against its trading peers, it went up very smartly from about 93 to 96, and it's now been hovering there. So even the dollar is not the dollar is not proven to be such a safe haven, while the precious metals have done it. And we forecast, and I'm really not, I've never been a gold bull, when I was young maybe, but I could see nothing holding back gold until the Fed, and we think the Fed will only move in early next year once the new president is installed, the new government is installed, and then they could stimulate, and that's actually quite an interesting story. Then they could stimulate because they still need to stimulate. This is really giving the fragile global economy a major knock. Then they could maybe stimulate like Justin Trudeau in Canada has done, and which both sides of the presidential battle are saying they'd like to do, is infrastructure spending, which will then again be good for...
Absolutely. Jacques, I do need to ask you what the scenarios are for South Africa then, because you spoke earlier about a window of opportunity, certainly in commodities and commodity prices. That then bodes well for commodity producers in a country like South Africa. America puts interest rates on hold for a period of time. Europe certainly isn't going to mess with interest rates for a considerable period of time. That means hot money flows around the world. We've seen the results in our bond market. We've seen the results in commodity prices. We've seen the results in the resources shares and the gold shares on the JSE. What investment opportunities are there in this likely Brexit scenario that you paint?
I would, in the likely Brexit scenario, then I'll stick to my gold and platinum investments, because that's going to be, everybody will have to want to put a bit more of that into their portfolio because there's so much uncertainty. Brexit will really create, we really believe, create more global uncertainty. China will suffer, their growth will suffer. China's already sneaking up their currency, weakening their currency, so that may help them in some extent. But at some stage, Donald Trump will notice it, and he's going to sound the clarion, and they will have to settle down again. And then all that's left for China is the old-style infrastructure spending. So the first window of opportunity would be the precious metals for South Africa this year, and then when the economy slows down slower, China will have to do the old-style infrastructure spending and buy, and the iron ore price will fall slower. It will still fall, we think, but fall slower. We already seen it lift after Brexit. It's actually made a nice, smart little uptick. So did Chinese steel prices. So we'd see that sort of not fall that much. So we can do this. Our iron ore miners would do better, but still not. There's still very much an oversupply of iron ore. And the same with the manganese guys, by the way. But our other commodities, I think it's also going to be a bit slightly, prices will have to be lower. The good news is that in the commodity scene, there are very little investment being made anyway now. So supply will also be limited. So it wouldn't really, we still believe prices will be going up.
It implies on many levels, I beg your pardon, sorry Jacques, it implies on many levels a better 2017 for South Africa economically, markets-wise, investment-wise, than 2014, 15 and 16 have been.
Bruce, I think already the second half. But you see, we've got the negative tourist aspect if Brexit happens. But on the commodity side, on our export sides, we're definitely going to see the multiply work through from the mining, the precious metal mining sector, which is about 50% of our production, mining production, and also exports. So, and also about more 50% of jobs created. So there's going to be a nice multiply coming through from that. I think the first good news I've noticed this year, in a sector at least, but on all, and there's also going to be money flowing in there, more investments in those sectors. But on balance, I'm not sure whether, I think everybody in the world will be suffering. But while the Fed is on hold now, it also helps us not. I don't think the Fed, the central bank, will be as crazy as here in South Africa to hike interest rates this year anymore. So we also have a bit of a reprieve there. So we're going to, this second half is going to be the easier. Next year, easy one. Next year is going to be challenging again. So we've got to make hay while the sun shines, I think, next 6 months.
No, I couldn't agree with you more. I think it's going to be an interesting 6 months, and it is going to be for those who are nimble and fast moving, the 6 months to Christmas. And then, of course, we dodge the ratings downgrade bullet, let's hope, and then hope for a slightly gentler, a slightly gentler 2017 than you intimate. Jacques Botha, thank you, Chief Economist at Afriforesight, for joining us on the Moneymakers, and thank you for watching. There'll be more, hopefully, safe havens and dry days and years to come on the Moneymakers. We're terribly optimistic here on the Moneymakers, but things certainly for this half of the year looking a little rosier than the first half and better than the year before and the year before that. For now, anyway. Till next time. Bye-bye.